We just have a quick question here from Rodrigo as well as Stewart asking us about the VIX chart or the volatility chart that we have set up in TradingView, how we can set it up and how we can use it in our trading. Now, just shortly, we did do a video about volatility and how that refers to various asset classes last week, guys. So make sure to check out that video. Just to quickly show you how we set up this chart. It's actually quite easy. It's basically all of the various volatility indexes that we like to look at. So the first one would be, of course, the classic VIX, which looks at the S&P 500. That is the one in gold. Now, that is a good one to use for equities. Then you also have OVX. OVX is the volatility index for oil. Then you have GVX or GVZ, which is the volatility index for gold. VVIX is an interesting one. That actually is the blue line, the light blue line. Now that tracks, if we just quickly go and hide the rest of these ones, that actually tracks the volatility of volatility. So the VVIX is the volatility. Think of it as the VIX of VIX in that regard. So it basically tracks the volatility of the VIX, which is an interesting one to look at. It does sometimes have a little bit of a lag, but it is an interesting one to overlay and see how the expectations of volatility changes for the S&P 500. Then also another one that we have on the chart here is the, you'll see this is a combination, is the Euro VIX, the JI VIX, as well as the Pound VIX. So this is basically the volatility tracking the ETFs for the Euro, the Japanese yen, as well as the British pound. Now, we don't have access to the JP Morgan volatility index for Forex. So this is a good combination to use to track the overall volatility of the currency space as well. Now, as we said, it won't include things like the Aussie dollar, the Kiwi dollar, the CAD, etc. So it only tracks the movements of the Euro, the yen, as well as the pound versus the US dollar in terms of volatility. So, but it does give you an overall view of the overall Forex volatility. Then we also have TYVIX. Now that is the Treasury VIX. So it basically tracks US bond, Treasury bond volatility. And then we have VXHYG, which is basically the volatility index tracking high yield corporate bonds. Very interesting one, especially to look at in terms of overall volatility. Now for equities, Rodrigo, the best one to use obviously is the one that works specifically for equities, which is the VIX. And you can also use the VVIX. Something that you can also use in line with that is the corporate bond, the high yield corporate bond VIX. It basically gives you the volatility of in and out flows, or expected in and out flows for high yield corporate bonds. Now, obviously, when we have very big risk off flows, we expect bonds to come down. So we expect the volatility of those bonds to go up. Which is something interesting to look at. Also keep in mind that most of these ones that we look at has either a delay or only trades in terms of the New York Open. So keep that in mind. You're not always going to have access to it. There should be a little bit of a delay to the futures one we use for the S&P. Some of the other ones will only open up when the New York Stock Exchange open. So keep that in mind. So that's just a quick look at the various volatility indexes that we have on this chart. Now, how you can add them is basically just start with a normal VIX chart. So open up a chart, add in VIX. I've called this one cross asset volatility because that is what this specific chart is tracking. If we go to a weekly time frame, for example, it shows the massive spike that we saw across asset classes as the market went into that tailspin. And now we're looking at cross asset volatility also coming down across the board. So that is why we have all of the volatility indexes on this chart simultaneously. Now, how you can add them is if you just start with a VIX chart, just go to compare. And then instead of saying compare, say add symbol. And then you're basically just going to type in all of the various symbols. So let's say it is OVX. You're just going to type in OVX. And then you're just going to select OVX, and that should put it on the chart. So make sure to say add symbol, not compare. When you compare it, it's basically going to give you, it's going to change the actual data or the actual numbers and can change it to a percentage, which is less useful. We want to see the actual values to see how these values change over time. So that's just a quick update on how we set up this chart and how we can use that in terms of trading with it. Always remember that there's going to be an inverse relationship between an asset class and its volatility. So whenever we see volatility spike up, we expect downside in the asset. Whenever we see volatility come down, we expect upside in the asset. So it's just a quick update on that. For more information, of course, check out that video we did last week as well. So I hope that helps, guys. If there's any other questions, just let us know.